Imagine walking past a billionaire on the street and not even noticing. No bling, no entourage, just quiet power. While most people chase fame, flexing their new toys or dream vacations, the richest 1% are stacking wealth in the shadows, using strategies you won't find in headlines. How do they do it? What's the playbook of the ultra-wealthy? Welcome to Next Wealth Gen, where today we're exposing the real, proven secrets of how the rich build empires without making a sound. This isn't hyper fluff. It is packed with actionable financial tactics you can start using today. By the end, you'll know exactly how the 1% grow and protect their money, and how to apply these principles to your own journey. Let's unlock the vault. First, let's talk about multiple income streams, because the rich never bet on just one. A single job is like a house of cards, one push, and it's gone. The wealthy spread their bets across businesses, investments, and passive income. Picture a tech CEO with a software company, a portfolio of rental properties, and dividends from blue-chip stocks. Or a hedge fund manager earning from carried interest, a vineyard investment, and an e-commerce side venture. Data backs this up. A 2023 study showed 65% of millionaires have 3 or more income sources. You can start small, launch a side hustle like tutoring, dropshipping, or content creation. Invest in dividend stocks yielding 2 to 4% annually, or explore real estate crowdfunding with as little as $500. Aim for 3 streams within 5 years. This isn't just about earning more, it's about resilience and exponential growth. Now, smart investing. The rich don't let money sit idle. They make it multiply. Inflation, running at about 3% in 2025, erodes cash and savings accounts. $10,000 today could be worth just $7,400 in 10 years. The wealthy invest in assets, stocks, real estate, private equity, even collectibles like rare coins. They diversify to manage risk. Think 60% in low-cost index funds, tracking the S&P 500, 25% in real estate, and 15% in high-growth startups. They also harness compound interest. For example, $5,000 invested at 7% annually grows to $19,671 in 20 years. They avoid fads, sticking to fundamentals, and often hiring financial advisors to optimize returns. You don't need millions. Start with apps like Vanguard or Fidelity. Invest $50 a month in an ETF like VOO, which mirrors the S&P 500. Consistency and time are your superpowers. Taxes are where the rich play chess while most play checkers. They don't just earn, they keep. The 1% use tax-advantaged accounts like Roth IRAs, where 2025 contributions cap at $7,000, growing tax-free. They structure businesses as S-corps or LLCs, cutting self-employment taxes by up to 15%. Real estate offers deductions like depreciation. Owning a $300,000 rental could save you $10,000 annually in taxes without touching cash flow. They also use strategies like 1031 exchanges, deferring capital gains on property sales, or opportunity zone investments for tax breaks. Asset protection is non-negotiable for the wealthy. A lawsuit, divorce, or market crash can destroy unprotected wealth, so they build walls. Trusts, like irrevocable ones, shield assets from creditors and reduce estate taxes. LLCs, separate personal and business liabilities. If your startup tanks, your house is safe. High net worth individuals carry umbrella insurance, often $1 to $5 million, covering gaps in auto or home policies. They also diversify geographically, holding assets in stable jurisdictions like Singapore or Switzerland. You can start cheap. Form an LLC for $200, $500, depending on your state. Get a $1 million umbrella policy for about $200 a year. If you're building wealth, talk to an attorney about a basic trust. These are your moats, keeping your empire secure. Here's a twist. The rich weaponize debt. Most see loans as chains. The 1% see leverage. They borrow to buy assets that outgrow interest costs. For instance, they might put 20% down on a $1 million commercial property, financing $800,000 at 4.5%. If it appreciates to $1.2 million, their $200,000 investment yields a 100% return, not 20%. They deduct interest, boosting after-tax gains. Or they use low-interest business loans to scale ventures, like a restaurateur opening a second location. Per a 2024 report, 70% of millionaires use debt strategically. You can try this with a mortgage for a duplex, live in one unit, rent the other. But be ruthless with math. Only borrow if the asset's return exceeds the loan cost, and always have a repayment plan. The wealthy also invest in intangibles, knowledge, skills, and networks. They read 20 to 30 books a year, from finance to psychology, and hire mentors to fast-track success. They join exclusive circles, think country clubs, or invite-only summits where deals and ideas spark. A single partnership can unlock millions. Studies show high earners spend 10% of income on self-education. You can emulate this. Read Rich Dad, Poor Dad or The Intelligent Investor. Take a $100 Udemy course on stock analysis. Join a mastermind group or LinkedIn communities for entrepreneurs. Attend a local Chamber of Commerce event. Your brain and network are assets. Upgrade them relentlessly. Discipline ties it all together. The rich avoid lifestyle creep. Earning more doesn't mean spending more. They reinvest profits into assets, not Lambos. They automate savings and investments, removing temptation. They also plan for generations, using tools like dynasty trusts to pass wealth tax-free. Look at someone like Charlie Munger, Warren Buffett's partner, who lived modestly despite billions, focusing on long-term gains. You can adopt this. Automate $100 monthly to a brokerage account. Cap lifestyle expenses at 50% of income. Set a 10-year goal, like $100,000 in investments, and reverse engineer the steps. Wealth isn't a sprint. It's a quiet marathon. One last gem. The rich embrace calculated risks. They don't gamble, but they bet on themselves. They start businesses knowing 50% fail, but structure them to limit losses. They invest in emerging markets or tech, like OR Green Energy, after deep analysis. A 2025 Wealth Report notes 80% of millionaires own private company stakes. You can take smart risks. Start a low-cost side business, like a blog monetized with ads. Invest 5% of your portfolio in a speculative sector. Fail fast, learn, and pivot. Risk is the price of outsized rewards. So here's the blueprint. Multiple income streams, smart investing, tax mastery, asset protection, leveraged debt, knowledge, networks, discipline, and calculated risks. The 1% don't shout their moves, they execute. You don't need a private jet to start. Pick one strategy today. A side hustle, $50 in an ETF, or a tax consultation. Small silent steps build empires. If this lit a fire, smash that like button and subscribe to Next Wealth Gen for more wealth secrets. Comment below. Which tactic will you try first, or what topic do you want next? Let's keep stacking wealth, one quiet move at a time. See you in the next video. Show in sidebar.